How's it hanging, everybody? Anybody out there, or did we all give up? Today was such a weird session. Gave up and came back. Yeah, today was really weird. I thought today was very tough, but it was at least partially because I was just dead wrong on the price action. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. This one helped. Sally Bob helped a little bit today. Shorts helped a little bit today. All right, so the market resumed getting smoked. SPYs here, including a little bit of a downtick after hours, are down just under 2.5%. Qs are 2.5% in the red. The IWM is 2.2% in the red. The TLT is down 1.5%, closed on lows, as the market just continues to sell everything that is related to the United States of America, and the dollar is also down a percentage point. So the selling continues. Yeah, I mean, eventually vol will tighten up at some point, I promise. I don't know when that'll be. Might be 5 years from now, or it might be in a couple weeks. In some ways, it already has, I guess. I mean, but that's coming from movements that were just absolutely historic. So the market gapped down pretty big today and never looked back. Sometimes these are my worst trading sessions, to be honest, where you get a really big gap, especially in this situation where you get a really big gap that puts you at like $10 of extension from the ADMA on the daily, and then yet you continue in that direction. Losing 520, to keep it simple, stupid, losing 520 is very clearly a spot where you could get downside continuation. It's just a really important daily level. 520 is a really important daily level. We talked about it in the morning meeting as, hey, if we are able to hold 520 off the open, or we get bought back through 520 off the open, that could be a long opportunity. And if we lose 520, what we said in the morning meeting was you could potentially look for momentum shorts or the break of support. That's not really my trade. It worked great today if you took it, but it's not really my trade. I find that it tends to be a low probability trade when you do that with a lot of extension already in the market. So at 520, we were like $7, $8 extended away from the ADMA on the daily chart at the time in which we were breaking. So I don't love shorting a market that's really that extended, especially after a gap, if the gap didn't have the opportunity to get satisfied. Like a better trade would have been on the short side, if you were looking for that, would have been that we like attempt to hold 520 off the open. So maybe this pivot low off the second 5-minute bar, or this pivot low off the fourth 5-minute bar gives you a snapback into this equilibrium area on the 5-minute chart, and then you get some sort of an upside shooting star where you're no longer extended on the small time frame, that where you could push for a lower low on the small time frame. And even with that trade, I honestly wouldn't be too greedy just because of the amount of daily chart extension that's already there. So it's not a trade that I love. I think it tends to be a pretty low probability situation the way it played out today. But that is trading for you, right? If you trade long enough, you will see plenty of low probability situations take place. And the question is, do you want to trade in the direction of a low probability situation? Maybe, if the risk reward is really good. But I'm going to argue that shorting $8 of extension to the downside in the SPYs inherently means that you actually don't have a risk reward, a good risk reward. So the short through 520 that you could have taken for that break of support, I don't just look at the fact that we broke through 520 and we went down to 508.50 and just say, hey, I think that was a great trade, because in hindsight it worked really well. The way that I think about trading always, when I'm analyzing my own trading, even in hindsight or whatever, is I'm never analyzing the result, I'm analyzing the process. And I stand by the fact that, sure, you could, if you're like a pure momentum type of trader, you could have shorted the breakthrough 520. Uh, Maybe done that as like a little bit of a day trade to get a bit of a push lower. But I don't love that as like a big picture, really good risk reward and probability of success trade. I like the long a lot better, but the market told us. I think the market told us by the time 950 rolled around to be very cautious or very patient on looking for that long, because at that point we're then holding beneath support, and that was the main, I think, gist of the morning meeting today. Was, yeah, you can look for those longs back through 520. You can look for longs versus the pre-market low. You can look for longs versus that 520 area. But if we lose 520, yeah, you could go for the momentum short, but more than anything, it probably just means to be a little bit more hands off. And the market got below support and was just incredibly weak. Uh, like, I commented on it, and I know Pat repeated the comment later. Today felt like a holiday trading session, except we were down 3% plus. Like, most of this price action here was very anemic. There was just no bounces going on at all. There was steady selling and no buyers. We had one pathetic little 7-minute bounce at 10:35. We had one also real small bounce a bit after noon when we saw some headlines come out that the White House is going to be speaking with executives at Walmart, Target, Home Depot, and Lowe's, and both of those failed. And then there was just nothing all day until into the close. And the first signal we had, the signal came from the options market. So first of all, I like in these heavy downtrending markets. Anybody who's been with me for a while knows this. I like when you trend down the entirety of the day to sometimes look for a move in the other direction in the last 1 hour to 30 minutes. And that's just because there's plenty of like day trading trend following algorithms that are shorting and selling this move the entire way down, but they're exactly what I just described them as. They're day trading trend following algorithms. So then they liquidate those positions into the close, and then you can get a little bit of a feedback cycle into the upside in that last 30 minutes to an hour. So that was the only real bounce that happened, and it did help this daily candle a little bit with the downside tail, but it's still not good. We're still well below 520. And then, again, the clue was in the options market. The first thing we saw was that interesting 0 DTE SPY buyer for, I think it was 512 calls. That was still when it was trading, I think at like 510 or below 510, went off in the last hour of the day. So those are some real lotto calls that most definitely paid. And then we saw the bigger SPY buyer come into the close. I guess he bought it per Josh's note here at 3:21 p.m. Someone bought. Those calls expire tomorrow though, not today. I'm pretty sure. Bought $514 calls that expire tomorrow at like like a couple $1 million worth or something. I'm trying to see if I can find it in Pat's post. Well, there is the. No, it's not it either. Oh, there it is. SPY bullish action. April 22nd is tomorrow. 514 calls, $2.18 million worth. Sick. So that's some size. And I mentioned it because I know Richard was asking about it with the 0 DTE one that we saw come in first. You don't see that happen too often, and I feel like when it does, a lot of times that's a real smart money buyer who's coming in and is usually very successful with that trade. You don't see it happen very often, but I've seen it enough, and Pat, maybe you can back me up on that because I think you pay even better attention than I do. Um, when you see that like 0 DTE buyer come in out of the money on size with less than an hour left, I find that trade pays that person relatively often. I don't know if they're looking at MOCs or what they're looking at, but that trade seems to really pay. So we got a little bit of a snapback rally into the close, and by a little bit, it it feels small because the ranges are so big, but it was still a $5.50 plus $6 bounce in the SPYs into the close, which is pretty solid. So again, at the end of the day here, market technicals don't look good. We closed below 520, so we lost that recent support level. We are trading $14 extended to the downside off the ADMA on the SPYs. I am kind of in the camp, and I think Josh was talking about this earlier, that we're not just going to immediately sell right back down to like SPY 490 in a straight line, though anything can happen in this market. I think like the really fast extension moves are over unless one of things happens. One is if Trump really pursues firing Jerome Powell, which I don't think will happen, I think that we see a second crash similar to what we saw in the beginning of April as we just further erode the confidence away from the United States. And the other time that maybe we could see a bigger crash, I think, would be if we get closer to this 90-day pause window without having any deals done, and then it just becomes a repeat of what we saw here in the beginning of April. But we do still have a lot of time before that, so I don't want to jump to conclusions. Up until then, I think that some degree of our extension rules should be in play. Maybe not exactly like, hey, we're $10 downside extended, so let's immediately start buying. But you start seeing us $15, $20 extended away from the ADMA on the daily chart for the SPYs or the Qs. I like the idea of looking for some trades in the other direction because I don't think that we're going to immediately go back to an environment where we are trading at $30 to $50 of extension like we saw after the catastrophic retaliation tariffs had been announced. So it's kind of where we're at. I thought it was a really tough trading session. I lost some money today. Is what it is. My day trading actually finished up small, but my swings ended up being net against me, and just couldn't really gain any traction. Like I was able to trade well enough for my day trading to be green a little bit, but I traded a lot of NVIDIA today just to end up pretty much exactly flat in it. I traded a lot of Meta today. I finished negative in Meta, and then I was able to just make a few bucks selling some puts in the SPYs and the Qs that a little bit more than made up for what I finished down in Meta by the end of the day. So net made a few dollars day trading, but I really struggled to get traction. I was smart enough to, for the most part, not really fight it though. Didn't really fight this down move too much. There's a couple spots where I tried to take some chances, and like I was saying earlier, there was just no buying at all. It really just felt like a holiday session, except with an underlying offer that continued to push this market down. So we'll see what happens going forward. SPY 520 continues to be important. If you can recapture that level, it'd be a big win for bulls. While we're holding above it, I would say at least in the short run, bears have control. We've got a lot of events coming up. It's the big, we're really starting to dive into earnings season. So we get Tesla tomorrow. We get Google later in the week. There's not a lot of major economic macro stuff coming out this week, but I would expect to continue to see a lot of tariff-related headlines that will continue to move the market day in, day out. So that's all I got. I'm happy to answer any questions like always. I think the first I'm seeing here is from Dave S. Do we think that Europe and parts of Asia that were closed today to play some catch up and continue the move we had today have that be a layer probability of further selling tomorrow? I don't know. I don't necessarily think so. Because I see what you're saying here, but I could almost make the opposite case also and say that European and Asian market participants, because they couldn't trade their own market if they were closed. I don't know if I guess parts of Asia were closed today. Okay. Maybe that just meant that they couldn't even sell in their own market. So if they needed to do any selling, they needed to do it in ours. That would be the opposite side of the argument that I would make. So no, I wouldn't really have any read through on foreign markets. A lot of them being closed for a holiday today, implying whether that means that we get further downside continuation tomorrow or what have you. That's all I got for you on that one. From Richard, prior to the close, we saw huge call option purchases that expire both today and tomorrow. The zero DTE position already profited handsomely. What do you read into that? Sure, so kind of went over that one already. it's like I said, there was like a lotto buyer of those 0 DTE calls that came in. I want to see if I can find that one too. It was around 3 o'clock. There it is. At 3:03. So on this bar here, 0 DTE SPY bullish action, $512 calls, about 67,000 worth. Nice trade, really really nice trade. Yeah, I mean it's like I said, those options are inherently a low probability of success but high risk. Sorry, a really good risk reward ratio trade. So low risk, high reward potential, but very very low probability of success. I don't know what made that person put that trade on. There's no way I can know that. But like I was saying earlier, I do find that when we see that unusual like 0 DTE flow hit on size into the close, I feel like it tends to pay. So maybe someone has an edge there, has an informational edge, or was viewing imbalances or something like that, and they were able to put that trade on and get paid on it. So that trade worked intraday really well today. The huge amount of calls that got purchased that expire tomorrow, like Pat said, into the close, you'd have to really go in and like study the open interest to try to figure out if they closed any today, because it did get a pretty decent move in their favor. But generally, I would say I think it bodes well for tomorrow. I feel like those smart players. There's a reason why we pay attention to large, unusual order flow. That's not Johnny Day Trader putting those positions on. That is someone with an institutional edge. And can people with institutional edges be wrong and lose money? Absolutely, it happens all the time. But those options, that tends to be the smart money, and that's why we pay attention to that data and that information when it comes in the virtual trading floor. So everything else held equal, which it never is, I would say it bodes well for tomorrow's trading session that we at least are able to hold up and maybe have some sort of a green day and close above SPY 514. But we'll see how it plays out. Thank you for the question, Richard. Let me pop over to the YouTube. See what's going on in there. Nothing. Seems like everybody's still on vacation. I feel like mentally I'm still a little bit on vacation today. But the market was certainly moving. So I guess I'll wrap it up there, even though it's only 4:30, because I got through all the questions that are in the VTF, and there are no questions in the YouTube. So I'll wrap it up there with just a short afternoon meeting as we get through our holiday weekend. Things will be picking up tomorrow with Tesla. Have a great night, everybody. See you then.